Hello, everybody. Brian here from quantlabs.net. Today is April 10th. Just wanted to go over an article I have seen on risk.net. Now, the headline is Industry warns CFTC, the regulator, futures regulator. Industry warns CFTC against rushing to regulate AI for trading. So they have a vote on a work plan pulled amid calls to avoid duplicating rules from other regulatory agencies. Now, I'm just going to read the first two paragraphs because, well, typical paywall business online. Um, and I'll just go over to tell you what I think else is going on out there, which is kind of worrisome, I guess. Anyways, this is the article. Market participants have urged Commodity Futures Trading Commission to proceed cautiously in developing new rules and guidance regulating industry use of artificial intelligence in trading to avoid adopting redundant or duplicate regulation. Jennifer Hahn, Chief Counsel and Head of Regulatory Affairs at Managed Funds Association, said regulators should prioritize reviewing and leveraging the existing regulatory framework, which may already be sufficient to address risk management. Okay, I'm sure there's a lot of things that I have missed here, but another article came from my solo source about how the government in the US is warning software developers from not adding on blockchains of these switches that turn into Web3 projects or um, uh, what's the other one? DAO. And basically, I do see there is a protection there that needs to be for potential scams. I get that. Um, but at the same time, if we are to live in a so called free society, and when a government is telling you how to write software and how you can freely trade on the markets, I think we are entering into Chinese communist or Russian communist control. So this is where it's at. So, from my perspective, in terms of how do we get around this, because you can't have it both ways. Um, I think the U.S., as we all know, I'm in Canada, so I'm looking in to the country, and the U.S. has pioneered all of what we know about when it comes to trading, futures trading, stock trading, leverage, the hours, the depth of the markets, the innovation in the markets. And we're not at a point where artificial intelligence can pretty well take over. I've been playing a lot with not just ChatGPT, but I've moved over to Google Gemini, the new AI from Google, or the updated AI. And I have to tell you, it's pretty impressive what it can do. And it can do it very naturally, and it looks natural. I'm sure there's software out there that can tell if the results are AI. I'm sure of that, and obviously Google themselves will know because they create it. Anyways, coming back to in terms of trading, I think where it gets very dangerous is when you start to see uh, large firms take on leverage, and a lot of that is generated by computers. And now, when it comes to portfolio optimization with AI uh, running the show, when it comes to leverage on trades, it can become a big risk to the general markets, and which will obviously negatively impact the overall economy. So, if AI is able to manipulate, exploit any of these opportunities, we'll call them, out there in the markets that it senses, the AI, I could see some danger there. Now, I do know up until probably a year ago, most folks that I asked about when it comes to machine learning and AI, they never really put it into their actual trading. They always used it for portfolio optimization, risk assessment, that sort of thing. That's where the AI machine learning was used up to. But now, if we're allowing the AI to actually automate the trades, what will be traded, when the entries take place, when the exits takes place, and adding on leverage, I can see it being a real danger, um, especially if the code, algos, whatever is um, hosted remotely in a so-called secured data warehouse. I think that can be somehow defeated internally, and that could be pose a real danger. That could pose a real risk um, to the markets and instead to the overall economy. And it's a systematic risk too. Uh, so, should there be ways to regulate it? Probably. Now, in terms of other markets, smaller markets, fortunately, there a lot of the markets don't have the, as I said, depth, the liquidity, and the volume in the markets to enable a trades to fully take place because there always has to be a counterparty to it. And I don't think these trading firms in smaller markets would have the ability to do that, or even if they did, I think the trust would be gone pretty fast, and that's why a lot of the trading uh, operators, I guess, only trade in trusted markets like the West, being the big ones because of the liquidity, along with the volumes, and it's trusted because of the regulation. So I said earlier, like, what kind of world are we entering into, where we're going to be told what we can and cannot develop freely when we enter in the markets? The way I look at it, it's like if you're working with an API, you're going to have rules to allow those calls to get accepted by an API and then get the response and then work off the response. So you will have to conform to whatever regulators have. They're the equivalent of the API because they set the laws. The larger brokers will follow and comply, and through those APIs that the brokers and markets enable and support will be controlled by regulators. So now we have, and you wouldn't think me saying that, but I can see the necessity of it. But when it comes to these large trading firms, like quote unquote the industry, remember the industry is uh, basically like large billion-dollar firms. Call them Citadel, BlackRock, Vanguard, and the like. And when you start to limit them, what they can and cannot do in trading, namely in the futures market, this is now the CFTC, they're going to squawk because now you're taking away their opportunity to make money. So when you look at the equivalent of Robinhood, Robinhood, the trading broker, if you're in the institution, you are on the inside, you know that they are basically not legit. Like, basically, when you have companies like Citadel buying the order flow from Robinhood and then be able to turn around and then trade against those open positions through the clientele of Robinhood, and that's basically manipulating those trades and the opportunity within microseconds that the retail trader and the dumb money basically on Robinhood won't understand. So they want to make that illegal. Well, they tried to, but they failed. I've watched the Congress sessions, and watching these old people, like these geriatrics, asking really technical, deep questions. And then you have the likes of Ken Griffin and that Vlad guy at Robinhood trying to explain all of this importance of what they do. And of course, the geriatrics of the Congress people, will call them. Oh, okay. Or the lobbyists will make sure that they stay in line. So again, nothing happens, nothing changes, and Ken Griffin continues his evil ways, cheating the dumb money, known as a retail trader, because they don't even know what's going on. So when you take that logic and trying to allow these large billion-dollar profitable firms to be able to, um, quote unquote, befuddle the regulators, the traders win, regardless. It's no different than what the banks get away with, and the little people suffer. So, in some way, the regulators got to win on this. On the AI, it's very powerful, but it's also dangerous. It's like we can sit here and complain about guns and how dangerous they are, but back in, I don't know, for hundreds of years, guns were necessary to shoot your food, but they can also kill you as well. So they have a double-edged sword purpose to it. So in this case, I guess they got to regulate the AI. I don't know how they'll do it, and I always say that why, because just generally, from a military standpoint, you have the West, Europe, Britain, Canada, Australia, New Zealand, and U.S. try that military armaments and all that the AI shouldn't be so sophisticated because it may take over and kill. But when you got competing forces that are basically your enemy, the equivalent of China, Russia, do you really think that they're following suit uh, by preserving, making sure the AI doesn't do anything wonky? Of course not. So what will happen with the West? They'll put out their little positive PR, but behind in the shadows, they'll do evil things. Banks are no different. Trading firms are no different. Hedge funds are no different. So the regulators can say that they regulate, um, and they do, but they regulate the dumb money, the risk, the plebs of society, and that's me and you. But when you get on the inside, on the billion, like trillion plus companies, they get away with everything because they pretty well own the world. So all that regulatory again is all nice spin, nice PR, but it won't matter because the AI firms that are gonna, the large ones that have the resources to manipulate these trades, will get away with it no matter what the regulators, like the CFTC says, or the SEC. They won't hold back the little people. So that's my view of what's going on. I know it's been a week or so since I've put out a podcast. Part of that is just due to optimizing the trades, and we'll call them bots, on the integration between TradingView and my Python, and then sending out those trades via interactive brokers. Um, so I'm optimizing them, making them more intelligent. That's what I've been focusing on. So I thought I'd put this out there. That's important. But as I said earlier, I am playing around with the AI for both ChatGPT, which is really Microsoft, and the Google Gemini, for a variety of things, by sending out a prompt, get back a response. As I said earlier, Gemini seems to be light years ahead now of ChatGPT. So that's how I see it. So the AI can be very useful, can be your friend, but it can also be your enemy in secret when the larger firms are going against you, but they'll put on a little happy face while they stab you in the back. Another good example of this are the tax authorities. They say AI bad, 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 but the AI they'll use, the tax authorities will use AI to find the so-called quote unquote tax cheats, and then come down hard on them. Um, even the little hard, honest working person. So that's going on. And another thing I mentioned was about China and Russia. How are they going to be able to regulate their uh, trading models, trading algos in those countries when they have pretty well, I will imagine, full access to the U.S. markets via APIs? How do you stop them? That's a good question. So, yeah, it's something to be concerned about, but I do hate to say it. regulation sometimes is needed, and it's to protect from systematic risk. I'm not a big fan of it, but in this case, when it could take out the whole financial system, yeah, you got to do something about it to protect it. Other than that, hopefully you got some use out of that. And again, go on to our Discord. We're trying to encourage these type of discussions via the podcast, along with I am very active now on Substack and TradingView as well. So if you want to get those, I'll put all those links in the blog post. And Yeah, so I'll give you the link in the description of the podcast to the blog post where you can get all the other information regarding Substack, Discord, TradingView, and all the other stuff. Other than that, thanks for listening. Have a good day.